Ladies and gentlemen, please welcome to the stage our next presenter, Mr. Eddie Speed.
Thought I'd paid all my dues, then them South Texas blues told me, son, you ain't through.
I started in the note business when I was 20 years old. It wasn't intentional, it was accidental. My father-in-law, at the time, he was my girlfriend's dad. My father-in-law and another guy named Ed Langton formed a note buying company in Hattiesburg, Mississippi, called Mortgage Funding Corporation. If you're an old dog in the note business, you know the story. They essentially brought buying seller finance notes and reselling them in the institutional market to a business. Originally, they started in the business just selling to private investors. And then they found an institutional investor called Finance America. Finance America was a subsidiary of Bank America, and they were a consumer finance company. Interest rates were 20% at the bank. Seller financing became a necessity for an affordable mortgage. Finance America did some underwriting and due diligence. They looked at some sample files and they told these two guys, they said, buddy, we love this business. We got money to put out and nobody wants a 20% mortgage. And so if we could buy discounted notes at a 20% return, we'd be all over it. And we got millions and millions of dollars. Well, Ed and Jean, my mentors, said, we're all in, baby. Oh, Finance America said, just one more thing. Just one more thing. We can buy all of the loans that you can sell us that are 15 years or less. Because our computer system won't accept any loan longer than a 15-year amortization. Now, Ed and Jean were pretty clever. Ed and Jean came back and said, you know what? We won't sell you any more than 15 years of any loan. Because most of the notes that they bought were more than 15 years. There's a loan amortization of a 30-year loan. And Ed and Jean said, I'll tell you what we'll do. We'll buy the whole loan, and then we'll keep that, and then we'll just sell 15 years to Finance America. And there, my friend, is where it started. I worked for the guys that invented the idea of a partial, and they did it as a necessity so they could sell loans to Finance America. It was solving a problem that brought to the industry one of the coolest things that's ever been. Now, if you know how a partial works, you're buying this term of this long-term note, meaning that you're funding this part and you can lower the amount you pay for a loan that's got a little bit of a risk to it. Individual seller shows up and they haven't underwritten it perfectly. Well, you could buy it at 50% investment to value ratio until the loan pays a little performance, and then you could then buy the rest of the payments. You can hide the yield. You could give somebody with a seller finance note written at 9% interest payable over 20 years, you could buy 10 years for half of the principal. You could give them $50,000 for a $100,000 principal, $50,000 on a 9-year note, 9% note, and buy half the term. If we all had our financial calculators out, we would run it real fast and figure out, ironically, mathematically, that's an 18% return. You can hide the yield in a partial. You can lower the investment to value ratio and you can hide the yield. So Mr. Shoemake, my father-in-law, very smart guy, Mr. Shoemake, when I first interviewed with him, I'm telling you, when I showed up at Mr. Shoemake's office, buying notes is the first job I'd ever had where I had to take my spurs off. See, they will laugh. You just got to say something funny, guys. I knew I'd get you. Mr. Shoemake had a pair of reading glasses. Mr. Shoemake had a long forehead. Good-looking man, Mr. Shoemake. He'd pull him reading glasses down. He had them right down the end of his nose. He'd look over the top of them glasses. And he says, Eddie, you know how to make a lot of money in this business. I didn't even know how to spell note. I thought a loan was being by myself. Mr. Shoemake looked down at the glasses and he says, you know how to make a lot of money in this business? I said, no, sir, Mr. Shoemake, tell me. He said, buy long and sell short. I had no idea what that meant, but I do now. So that was how it worked. And after 15 years, Ed and Jean figured out that they owned the residual interest in a whole lot of notes. Residual income, we called it. Worked out pretty good. Pretty good business. So from 1980 to 2000, we did over 20,000 partials. We bought partials in every problem-solving situation out there. We'd buy the whole note and we'd sell a partial. We'd find a portfolio of land notes and only buy the first half to lower the investment to value. We were buying retail seller financing. We could hide the discount in the yield in the way the partial worked. Did all of that stuff. Partials. My retirement account from 1980 to 2000, we did none in our retirement account. Zero. I'm teaching a class with a pretty smart fellow that found a company called Quest IRA. His name is Quincy Long. Teaching it with him and Walter Wolford. Quincy's a walking encyclopedia, asking him anything about IRA accounts you can imagine. You cannot hardly trip Quincy up. So there's people are blowing up and asking all these questions. I had been buying the whole note and selling a partial corporately for 20 years and 20,000 deals. Virtually nobody in the business had ever done this. Yet I'd never done it in my retirement account. I said, Quincy, how much do you have to invest to make this work? He said, what do you mean? I said, how much would my Roth IRA have to invest in a note to make it work? He said, well, the IRS general requirement is $100. I said, you mean I could take a $100,000 note and I could sell a front end to the investor, a partial, for $99,900, and I could take $100 in a Roth IRA account and I could own the backside of that note? He said, I don't know what you just said, but it sounds like you could do it. I said, no, Quincy, let me show you. I'm going to take my IRA, I'm going to buy $100,000 and make a $100,000 investment in a note. I'm going to buy a stream of payments for 30 years. I'm going to find a private investor that will fund $99,900, and they'll buy 12 years of the note, and I'm going to take my Roth IRA account for $100, and I'm going to own the back 18 years of that note. I said, is that legal? He said, it's legal. I had the best idea 20 years after I had been implementing the same plan. Now, let me tell you, before you sadly look at me and say, he is as dumb as he looks, let me first assure you of one thing. I am still the first guy to do it. I say, kaboom. Now that strategy has now changed my life, it's changed my family's life, and it's changed the life of a few thousand people because I've taught people how to do this, and this strategy has been something that's been done over and over. Now let me say something to you. Jeff Watson or Quincy Long or anybody that really understands this at a deep level is not going to go tell you to do 50 a year in your Roth account at $100. So Jeff, I've done the disclaimer. You need to be a little more creative than that. We can have a longer conversation about what that means, but that could trigger some income unless you are a little more strategic than that. But you could do an account that way and make it work. And that has allowed my kids to start out with a low amount of money in a Roth account or a health savings or whatever that may be, and you can really, really grow this up. But the point that I'm making to you today is not a math lesson. It's a life lesson. The point I'm making to you today is I'm going to ask a question to you, because I ask myself this on a regular basis. What is it that is right in front of your nose? What is it that you know how to do that you haven't considered that other twist that could absolutely change how you went about this forever? What one thing have you been doing that you could retwist it, respin it, reanalyze it, and that would be your revolutionary thing? You see, I did something for 20 years. I thought I was the ultimate cat's meow at understanding partials. In 20 years and 20,000 transactions, I figured out I could be more innovative yet. My question for you today, is there something in your business that you could do to be more innovative? It's right there. And the way you start doing this is you just never give up trying to be creative. That's all there is to it. I stumbled in the idea of notes. My father-in-law got me in it. I stumbled in the idea of partials, but I had enough experience to recognize an opportunity. And that's my question to you today. What is it about what we're doing in this business that we could revolutionize if we just thought about it? It's just right in front of our nose. Thank you.